subsequent Sharia screen. And an important point to consider is that these criteria contain two aspects. First one is that scholars have devised a strategy whereby if something is not halal, then obviously it is considered as not halal. But there are certain other things whereby there is a gap between something which is relatively less liked to something which is called mustahab, more liked, then obviously they have tried to bring that thing or control from the less liking towards higher liking. So this is a scholarly decision which is being taken by the scholars, qualified scholars. So from that perspective, I'll just be sharing those important points with you because unfortunately we don't have that much time to go into detail of each and every screening criteria. The second point that is being evaluated from Sharia perspective is that of the investee company is that the interest bearing debt of the investee company should not exceed 37% of its total assets. Now, third point is the total illiquid assets of the investee company as a percentage of total assets should be at least 25%. Illiquid assets are those assets other than cash and cash equivalents. So these assets includes mainly tangible assets. So these assets should be at least 25% as compared to that company's total assets. The next point is investment in Sharia non-compliant activities. Now, we have gone through the first criteria whereby we evaluated the major business activity of the company and we evaluated that the nature of the business of the potential investee company is Sharia compliant. So now the company's major business activity is Sharia compliant, but in case if there is an allied product, service or investment, for instance, if there is a cement manufacturing company, but because of same group company or group holding, they might have to invest in or take shares of a conventional financial institution. So in that, from that perspective, or maybe there is a car assembly project or plant or a business, but because of a group company, they might have to hold certain shares of a conventional financial institution, or if their business is Sharia compliant, but sometimes they might have to place their funds for a short term to medium term in a conventional financial institution, then that is not their basic or major business activity. But having said this, sometimes they do invest or make such investment which are not Sharia compliant ab initio. From that perspective, it needs to be evaluated that the total investment of the investee company in Sharia non-compliant business should not exceed 33% of total assets. Now, usually the basis of this kind of control is that is taken by scholars from a famous hadith of Prophet Muhammad sallallahu alaihi wasallam, whereby he has mentioned that 1/3 is major, which means that if someone's investment in a non-compliant activity is more than 33% of its assets, then obviously it will be considered as a major activity, and from that perspective the company becomes non-compliant. Now, having said this, if the company is meeting above mentioned four criteria, the fifth one is that the income from Sharia non-compliant investment should not exceed 5% of the gross revenue of the investee company. In case if the company is earning, let's say, a certain percentage of income from a non-Sharia compliant source, then it should be less than 5% of the gross revenue of the company. And next point is that the net liquid assets per share should be less than the market price of the share. This is another important area whereby it needs to be evaluated that a share represents both kind of assets, that is liquid as well as illiquid assets. Now, net means net of liabilities. So if a share is representing a liability, net liquid assets, net of liability, liquid assets per share should be less than the market value of the share. Otherwise, it will be tantamount to discounting of the face value of cash present in the organization, which will be riba. Now, coming back to the fifth point, whereby it is stated that a company's non-compliant income should be less than 5% of its gross revenue. So now coming back to this point, whereby I was discussing that the fifth point was, if the company is having a non-Sharia compliant income, that it needs to be less than 5% of its gross revenue. Now, a question arises that if a company is earning less than 5%, let's say 3% or 4% of non-compliant income, how could that non-compliant income is allowed, even if it's less than 1%, 0.1%? So the answer to this question is, it is not allowed to have a single penny of haram income to be taken into your account. But this is regarding the evaluation of a scrip or a company, whereby it is allowed to invest in that company, but that portion of non-compliant income that company has earned less than 5% needs to be given into charity, and it is called purification of income. This whole process is called purification of income, whereby one cannot take even a single penny of non-compliant income earned through any source by any investee company. There are various methods globally accepted and adopted by various institutions to purify that income. Most common among these is in Pakistan. The method is that non-compliant income is divided by the gross revenue of the company to arrive at the charity rate, and this charity rate is subsequently multiplied with the dividend income received by the company to arrive at the amount that needs to be given into charity. And this whole process is called purification of income. So this is another important area that needs to be taken care of while managing an Islamic investment or doing an Islamic investment through equity market. Now, the next important area, besides having evaluated any company for inclusion or exclusion from KMI 30 index or KMI all share index, is that of technical filters. Once a universe is being established on the basis of this screening criteria, it is again shared with the Pakistan Stock Exchange management, who will perform the technical filtration of these scripts to come up with the list of final KMI eligible securities, and then they subsequently issue the notice to the general public, and they recompose these Islamic indices. During a year, at least 2 times the scripts are recomposed based on the financial statements of half year and annual accounts of the investee companies. This is how KMI indices work in Pakistan at Pakistan Stock Exchange. Now, besides KMI 30 and KMI all share index screening, there are certain other aspects that needs to be taken care of while managing an Islamic investment funds. And we need to understand that within the Pakistan Stock Exchange, there are at least 3 to 4 different segments through which an investor can invest in any script through Pakistan Stock Exchange. The most common segment of the market is called ready market, whereby ready market is a market whereby the settlement of the trade, which includes settlement of the payment by the buyer and settlement of the scripts or shares by the seller, takes place usually on the third day of settlement, which is T plus 2, transaction plus 2 days settlement time. So this is a ready market usually whereby if there is an eligible stock from Sharia perspective, then scholars allowed to invest through the use of this ready market, which is a very common market. The other market is the spot market, that during the book closure period days, that particular company's shares are transferred from the ready market to a spot market where the transaction is settled within the next 24 hours. So from Sharia perspective, if any company's share pass through this criteria of Sharia stock screening, then from a spot market one can invest in this market. The third segment is futures market segment, whereby a future settlement date is decided usually at the last week of the month, and those futures are called that particular month's future. So from a Sharia perspective, trading in futures is not allowed because there is an element of uncertainty in it. So we cannot invest in the futures counter and through the futures market. The fourth one is relatively new as compared to these three, and this is a book building process whereby scripts are, once they are in the initial phase of issuance for the first time, they are being sold to the potential investors to establish an initial price in the market. So if the company is Sharia compliant, then it is allowed to invest through a book building process. So there is no issue in it. So now, having said this, there are certain other issues, related issues. For instance, right shares issue. Now, a company usually issues right shares, entitlement to subscribe those right shares to the existing shareholders in the proportion of their existing shareholding in the company, so as not to dilute their investment proportion. So from Sharia perspective, if the company is Sharia compliant, then the company may issue obviously right shares, which after subscription will become ordinary shares. So there is no harm in issuing those shares. And the person who are holding those shares and they have the right to subscribe those shares, they may subscribe it and invest in the company to purchase more shares. This is absolutely Sharia compliant. There is no issue in it, except for the fact that the letter of rights or the option that the existing investor has to invest in those companies cannot be traded. Unfortunately, it's a market practice whereby letter of right, LOR, is usually traded or sold in the market at a discounted price. Because this is an option, so this option cannot be bought or sold in the market because it is specific to an existing shareholder, and it cannot be sold or bought from that person who has been assigned this option by the company. So letter of rights cannot be traded. However, right shares can be issued by the company and they can be subscribed by the individual or a corporate investor. Once it is subscribed, it will become ordinary shares and they can be traded in the market like any other share. So there is no issue. Now, there is another important area which is called shares buyback. We all know that usually the term buyback is referred to in Islamic finance as bayina, which is not allowed. Now, having said this, when we talk about shares buyback term, it is usually used in the context of two different type of transactions. One of them is allowed while the other one is not allowed. Now, this is another important area. Let me talk about the one which is not allowed first. Shares buyback means if there is, let's say, a repo transaction, for instance, the shares or scripts of even a Sharia compliant company is being used as a collateral, as a security for an interest-based lending or borrowing transaction, then that initial transaction is that shares are bought by an individual and then again sold to the initial buyer, and that initial transaction of buying those shares are done with the promise to sell it to the concern at a relatively lower price or a higher price, depending upon whether it's a repo transaction or a reverse repo transaction. Then these type of transactions are non-Sharia compliant because it involves riba as well as bayina. On the other hand, the other kind of transaction which is perfectly allowed is whereby usually when a company having a limited authorized capital comes to a stage whereby that company has issued and subscribed and paid up capital nearing its authorized capital, and it's a cash rich company whereby the company has got the cash, then sometimes that particular company in itself calls for a buyback of its issued, subscribed, and paid up capital shares from the market from the existing shareholders. This kind of transaction is also called shares buyback by the company. So from Sharia perspective, the underlying structure in this kind of transaction is that those shareholders who remains the shareholder of the company now have purchased the shareholding of those shareholders who have sold their shares to the company and have exited. So these kind of transactions are not at all bayina because they are not pre-structured. Rather, they are like buying a share of ownership from one partner by another partner. So the partner who remains has purchased the share of those partners who have left the organization. So this is again Sharia compliant if it's not pre-structured. So this is another important area which is called shares buyback. Another important aspect of making a Sharia compliant investment is direct purchase of shares on flotation. Now, it means usually the term used for this kind of transaction is IPO, that is initial public offering, that a company's shares are issued to the general public for the first time. And from Sharia perspective, once this issue or this offering is announced in the form of an offering document, then this time in this type of transactions, we usually financial statements or a brief overview of the company's operations are also being shared with the general public who might be interested in making Sharia compliant investments. And from that information, financial information available, they're being evaluated by the scholars on the basis of the screening criteria as we have discussed earlier. And if that company is Sharia compliant on the basis of that screening criteria, then one can apply to purchase those shares at the initial public offering. So this is another important area. While making a Sharia compliant investment, there is one important aspect. Now, from philosophical perspective, once a person is purchasing a share of a company, he is becoming not just an owner of that company with that amount that he has invested in that company, having a particular number of shares, which means as compared to the overall issued, subscribed, and paid up capital. He has purchased that much equity in that company. He's also becoming a partner, a sharik, a musharaka transaction along with other investors in that particular company. So now this is relatively a deeper concept, which means that, once you have become a partner in that company, it means it is your responsibility as well to make sure that all the affairs of the organization which you own are, all the operations, all the activities are being done in a Sharia compliant manner. Being a Muslim, it is our responsibility to make sure. Now, there are various aspects to it. Say, if you have that much equity, you have that much management control of the organization, you are bound to make sure as an investor that there is no non-Sharia compliant activity, investment, business activity, or any other activity related to that company is being done in a non-Sharia compliant manner. On the other hand, in case if you have minority shareholding, you don't have the authority, the control of the management, the organization to ensure that all the operations are being done in a Sharia compliant manner, then at least what a Muslim investor needs to do is to make sure to show their discomfort on the non-Sharia compliant activities. Now, having said this, we need to keep this in mind that this company is already, prior to making any investment, this company is already being evaluated on the Sharia screening criteria, which means the non-compliant activities are not their major activities. They must be minor activities, and we are trying to remove those minor activities from the operations or sideline activities of that institution. Now, the way of showing these discomfort is firstly through writing letter or an email to the management of the institution that as a shareholder, as a partner in this firm or organization, as one of the owners of this institution, it is hereby suggested, advised, requested, instructed to the management to make sure that no non-Sharia compliant activity takes place in this organization. Now, on the other hand, what they can do as an investor, as a Muslim investor, is to attend the annual general meeting of the company, the AGM of that company, either by themselves or they may send someone through proxy, and whereby they should raise this concern in the annual general meeting of the company. Now, as a law, all the activities of the annual general meeting needs to be, recorded, and all the activities needs to be minuted, whereby the management needs to take action. They're supposed to inform all stakeholders as to what measures and what actions they have taken for those observations or concerns being raised in the AGM by the shareholders or their nominees. So from that perspective, it is a very important area whereby we need to, as a Muslim investor, we need to make sure that even a minor portion of our investment should not be used for any non-Sharia compliant activity. So this is another important area whereby showing of discomfort by investor is very, very, very important for a Muslim investor. Coming to the next point is about, there is a very popular term. There is a very popular term being used, especially in the context of subcontinent, which is called badla. Some alternative names of this badla is COT, carryover transactions, or CFS, which is called continuous funding system. So now these are nearly the same things with minor operational amendments and differences in modalities. And this COT, badla, or CFS is simply a financing arrangement, usually In fact, majority of the time, it is based on interest-based lending, whereby an investor can invest or purchase shares through borrowing on interest. So there are two aspects to it. First one is making investment in equities through taking finances on the basis of interest. And on the other hand, making investment uh, on Badla, which means providing financing on Badla and earning interest on those financing. So from Sharia perspective, obviously we cannot take interest-based loan and make investments, and on the other hand we cannot make investment in a non-Sharia compliant manner because this is the riba-based lending, purely riba-based lending product. So this is Scott Padla and CFS directions. Now, another important type of trade is day trading, or we can say it's trading before settlement. This day trading or trading before settlements includes trade which is being made by immediately purchasing before settlement of that particular share. For instance, if somebody has purchased a share, let's say company A shares in the morning, it will be settled in the ready market in T+2 market on the third day usually. Now, what they do is, if the market has increased, the prices of that particular company or share has increased, and the investor finds it absolutely fine to take or encash that gain, then he may sell that share during the day, maybe in the afternoon session. Now, the challenge or the issue from Sharia perspective is, prior to going to the Sharia issue, let me clarify that usually people say that, as soon as you purchase those scrips, the risk and reward related to those shares are transferred to the new buyer from the old seller. So from that perspective, once all the risk and rewards are transferred, all the risk and rewards are shifted from the seller to the buyer, then the sale transaction is done, completed from Sharia perspective as well. So now there is no harm in selling it again in the market. But on the other hand, there are a few aspects to it that are being evaluated by the scholars, and on the basis of that, they have disallowed the sale of shares prior to its settlement. Settlement means that particular purchase scripts are entered or transferred into buyer's CDC account. The basis includes that there is a law in Pakistan Stock Exchange which suggests that Pakistan Stock Exchange hereby guarantees that if the seller fails to deliver the scripts that he has sold in the market at the time of settlement, that is in the ready market on the third day, then stock exchange hereby guarantees that it will purchase those scripts from the market at any price and will make sure to give the delivery to the buyer and will charge the difference in price to the defaulting member, which suggests that during that particular type of trade, the class of scripts are identified, but exactly those scripts are not identified unless they are settled usually on the third day of transaction if it's a ready market, or prior to that if it's a spot market. So based on that, it is being advised by the scholars not to enter into day trading or trading before settlement. Another important concept is short selling, or maybe called blank selling, whereby if there is a bearish market trend, whereby we call it in Urdu as a mandi ka rujhan, whereby the prices are going down and the investors are very pessimistic, their mindset that prices are decreasing and it will continue to decrease. So in that case, it's very easy to perform or sell those shares or scripts. And then obviously, as it's a net settlement based trade, so they initially sell it and then subsequently they purchase that particular quantity at a lower price to earn a handsome profit. So from Sharia perspective, if you do not have anything in hand, then you cannot sell it. So from that perspective, you cannot do short selling and one cannot do blank selling. It is against Sharia, it is unethical, and also it is illegal in Pakistan. So these are few important areas. Last but not the least, obviously while making an Islamic investment, we need to make sure that all these investments, all these avenues whereby a fund manager or or an investor invest, all these are priorly approved by a qualified learned Sharia scholar. This is very important area. So from that perspective, these are some of the areas whereby an individual or a company can make Sharia compliant investments directly. Another allied or important area of making Sharia compliant investment is through uh, Islamic mutual funds or through asset management companies or fund managers. Asset management companies or mutual funds or Islamic investment funds, they are another important pillar of Islamic capital markets equity investment sections. The underlying concept of Islamic mutual fund is that usually when we talk about the liability side of an Islamic financial institution's balance sheet, usually we discuss the three main concepts of or underlying product base on Islamic financial institution. The first and the most common among them is on the basis of musharaka. Usually you have musharaka on the liability side, whereby Islamic banks or Islamic financial institutions and the depositors, both of them invest, and obviously Islamic financial institution or Islamic bank invest those funds in any Sharia compliant profitable avenue, and once the profit is earned, then that profit is shared between bank and the depositors. On the other hand, the second type is called mudaraba, whereby one partner, that is the depositors called Rabbul Mal, they invest the money with the Islamic bank, and Islamic bank act as the other partners investing its expertise skills called mudarib, and this amount once invested in a Sharia compliant manner generates returns or profit, then these returns or profit are shared with the depositors along with the bank in a pre-agreed profit sharing ratio, not rate but ratio. The third type of structure on the liability side is usually called the Vakala structure. Unfortunately or fortunately, we usually don't see that much Vakala structure on the liability side of Islamic banks. But Islamic mutual funds or asset management companies, the way they structure Islamic mutual funds is on the basis of Vakala, whereby the asset management company, usually known as the fund manager, they act as wakil, as agent, as investment agent, as a wakil bil istismar, investment agent of the unit holders or the investors of the fund who are the owners of the fund. So now, when we talk about Islamic mutual fund, the structure has got multiple entities. The first one is a separate legal entity called Islamic Mutual Fund, which is a separate legal entity, which is being managed by a fund manager, usually asset management company, which is another separate legal entity. It manages those funds, different funds. asset management company at any given time manages multiple funds. So that asset management company acts as the fund manager, or the Vakil bil istismar, investment agent, and the investors who are called unit holders, they are the owners of that fund. They are the actual investors of the fund. Now, there are three parts to it. First one is the owner, that is the unit holder or the investor. The second one is the Vakil, the investment agent. And the third party to it is called trustee, which is the administrative owner of the fund from Sharia perspective. Now, what is exactly this role? This role is that as we have so many investors who are the principal, who are the owner of the fund, now an agent, while making any decision, needs to take approval or guidance from the owner or the principal. So at any given time, if they tend to take approval from even the majority of the investor, then it takes a lot of time. So what they do is, at the inception, they divide this ownership into two major areas. First one is called beneficial ownership, which remains, the nafe nuksan ki ownership remains with the initial investors or the unit holders. And the other part is called administrative ownership, that is being given to a third party, a professional party called trustee. So now there are three parties to it. The first one is the investor. The second party is the agent, which is the fund manager, the asset management company. And the third one is called the trustee, which acts on behalf of the unit holders, and they take all the administrative decisions on behalf of unit holders. So these are the three parties. That's how an Islamic investment fund works. Obviously, they have multiple structures, as is the case with other conventional funds. They can be open-end mutual fund, they can be closed-end mutual fund, they can be Islamic unit trust schemes, and then subsequently they have different investment dimensions, which means they can invest in Sharia compliant equities, they have Sharia compliant balanced fund, they have Sharia compliant money market funds, whereby they invest in Sharia compliant fixed income securities like sukuk, and they invest in Islamic banks. Same is the case with the cash funds. We have Islamic cash funds, we have Islamic exchange traded funds, we have Islamic real estate investment trust, we have Islamic capital preservation funds. It is not a capital protected fund, it is capital preservation through structuring in a Sharia compliant manner. So alhamdulillah, all in all, nearly all types of conventional mutual funds are available in a Sharia compliant manner. So this is another important area whereby they have different options of making investment in a Sharia compliant manner, and they also do and make sure that all these investments are pre-approved from a learned Sharia scholar to the Sharia advisors. They do screen their scripts on the basis of Sharia screening criteria being given by the respective Sharia scholars, and they also follow all those points that we have discussed earlier. So this is it from my side regarding the Sharia compliant investments in the equity market that we do in Pakistan. And I would request all participants, if they have any questions, they can write it down in the Zoom chat section, which I believe is, if not enabled yet by the admin, they'll do so, inshallah, and we can take certain questions and I'll try to answer, inshallah. So please, you may write your questions in the chat section if you have any.
Sheikh Farhan, can we speak also, or need to write in the chat box?
Please, Sadaqat Sahab, no, if you may write it down, Jazakallah khair. We have a policy to take only written questions, unfortunately.
Okay.
Thank you so much. Okay, we have a question from OVS that why do we have 230 index in all scripts? Actually, the reason is that initially KMI 30 was developed to come up with the 30 most liquid Sharia compliant scripts. Now, KMI 30 was then compared with the KSE 30 index because that was another 30 most liquid scripts of the Karachi Stock Exchange at that point in time. And in terms of return, KMI 30 outperformed KSE 30 index. So based on the success of KMI 30 index, the regulators and the stakeholders, they decided that we need to have another index of a relatively larger universe. There was another reason whereby people tend to mistakenly take those 30 scripts are as the only Sharia compliant scripts available in Pakistan Stock Exchange. So this was a misconception on their part. So in order to rectify that or clarify that, they come up with an all shares whereby they tend to present a universe of all Sharia compliant scripts available in the market, listed on the Pakistan Stock Exchange, subject to certain basic technical and Sharia filters. So that is the reason why we have two new indices. We have a question from Paras Javed regarding taking the non-Sharia compliant scripts as collateral. Obviously, they are non-Sharia compliant assets, so they are not being taken as a collateral. They cannot be taken as collateral. At present, stock screening conducted by compliance to 5 or 6 criteria. Are these the only criteria? Can you expect development further criteria in future? At present, stock screening, as I mentioned earlier, there are two screenings. First one is the initial technical filter, which includes criteria like those companies that are now on the defaulters counter of the stock exchange. They are being, removed from the list that are being evaluated and things like that. So after this initial screening, the whole list of all listed companies are shared with the Mizan team for performing the Sharia screening. Once Sharia screening is done, then we have a list having one list of Sharia compliant scripts and the other one as non-Sharia compliant scripts. Now, if we talk about KMI 30, obviously, as I mentioned earlier, there are two detailed technical filters. First one is the free float market capitalization, and the other one is impact cost. Now, all the free float market capitalization and impact cost related to those scripts are calculated by the stock exchange, and they assign a different weightage to those Sharia compliant scripts. And then based on that weightages assigned by the Pakistan Stock Exchange team, they come up with the top 30 companies having the highest weightages to be included in the KMI 30 list. Now, on the other hand, all the Sharia compliant scripts are now taken to form the Sharia compliant KMI all shares index. So these criteria are there. It can be amended, it can be adjusted. Yes, it's not all in one that, it's not that one time decision. It can be amended in future as well. Purchasing shares in the capital market, like purchasing Facebook shares at lower price and selling and earning something with the cost of others, though it's permissible on. Now, Hujjatullah, Mr. Brother Hujjatullah asked a question: purchase and sell shares in the capital market. Yes, obviously, the objective and the intention of purchasing a share is to take a stake in any company. It means to become partner with other shareholders in any particular business or company. So from Sharia perspective, becoming a partner means becoming a sharik, entering into a musharaka, which is absolutely halal, subject to few things, that the process of taking a share in the company should be halal, and the company in which you are entering is Sharia compliant. So from that perspective, yes, one can purchase and sell shares. It is just like purchasing and selling your stake, any other asset. So you can do that. As far as a particular script that you have mentioned to is concerned, maybe like Facebook and things like that, you need to evaluate its Sharia compliance. I don't have its financials right now with me, so I cannot comment whether it's a Sharia compliant script or not. Dr. Saab, I cannot see your question in the list. Muhammad Ali, can you please write down your question?
I have submitted. I can see chat box showing my question.
Okay, I'm going to ask a question. What is the Sharia concept or logic behind having at least 25% illiquid asset? Well, we all know that we have different school of thoughts and they have different guidelines regarding the necessity of trading or making any trade. So now the point is that as far as Hanafi school of thought is concerned, or Ahnafis are concerned, very little or minute illiquid asset along with liquid assets can combine together, can be traded, and it is permissible from that perspective. But as far as the other school of thoughts are concerned, some of them have the requirement of 33%, while some of them have a requirement of having it at least 50% illiquid asset in order to be able to trade in combined together with liquid assets. So from that perspective, it is always better to have higher number of illiquid assets in any particular script so that it is acceptable among all. That is the basic logic and reason behind this. Qazi Ubaid, why intraday trade is not allowed when risk and rewards are transferred, and as you said, the PSA is bound to deliver the shares also. Qazi Sahab, I believe I have addressed this question earlier as well. That it's a basic requirement. It's a rule of sale in Sharia that you need to have something not just in the form of related risk and reward. Rather, you need to have it in your possession. Possession can be physical or constructive. As if the shares are in your CDC account, it is considered as a constructive possession. You need to have asset in your possession so that you can sell it to any third party. Though the risk and rewards are transferred, but it's not considered as a possession. Once you hold the possession, only then you can sell it to any third party. That is the reason why intraday trade is not allowed yet. Sadaqah Sahab. Okay. So Dr. Saab, question is it the same as AOFI or we have different Sharia screening criteria? So Dr. Saab, we have different Sharia screening criteria, which is being used by KMI. It is developed by Mizan Bank Sharia Supervisory Board, chaired by Sheikh Taqi Usmani, who is also the chairman of AOFI Sharia Board as well. The difference, one of the reasons for the difference is obviously it varies from country to country, economy to economy, whereby in certain countries we have tax-free environment as well. In certain countries we have, in Pakistani economy, we have companies who are doing business having huge debts, and they do business on through taking finances, while in other countries that's not the case. So scholars are taking decision on the basis of a particular country. So that is the reason why there is a difference in screening criteria, as is the case in the US and developed countries, whereby majority of the companies, they use the Dow Jones Islamic Market Index criteria. So it varies from country to country. What are the major challenges faced while performing Sharia screening? Oh, a very good question. What are the major challenges being faced while performing the Sharia screening of equity? A lot of it. Actually, fortunately, in Pakistan, there is a mandatory regulatory requirement for the disclosure for a company related to, Sharia compliant financing that they take and other related areas, so that it can be screened conveniently. But unfortunately, not all companies are following those instructions, and I've been informed by a very responsible source that the regulators are looking into it. They are seriously evaluating those companies and watching those companies that are not making those disclosures properly, so as to make it convenient for Sharia minded investors to decide whether this company is Sharia compliant or not. So lack of proper disclosure by the companies so as to evaluate that company's Sharia compliance status is a major challenge. On the other hand, not all companies issue their financial statements publicly at proper time. So this is another issue and challenge whereby we need financial information at the right time so as to process it at the right time. So these are the few challenges. Unfortunately, there is, I mean, in the international market, the data is available in a standard language in the soft form, which can be conveniently interpreted by the systems. It can be, downloaded easily and conveniently. But unfortunately, Pakistan, we are in the process of converting our data to that digital form. Not yet. So from that perspective, there is an element of sometimes human error as well, which is a risk there. But alhamdulillah, we're trying our level best. Alhamdulillah, we have been doing this for past many years. So inshallah, it is gradually improving. Things are, going in the right direction. Alhamdulillah. So thank you for asking these questions. Suggestions to IBSC. If currently IBSC is playing a vital role in educating and spreading to Islam banking, IBSC to please arrange another webinar on cryptocurrencies, Bitcoins, covering Sharia guidance from Sheikh Usmani. Definitely, your message is being conveyed to IBSC, and inshallah, we'll definitely plan. Is in Hassan Raza, in shares Muraba, is it permissible to sell or buy the shares at the price less than the market price? There is no harm in it. Essence of, there is no problem in shares Muraba. Even if it's not Muraba, it can be Musawama, anything, it's possible. Once a script is there, I mean, once an asset is there in your ownership, you can sell it over and above the cost price, maybe at the market price, or maybe lower than market price or higher than market price. It all depends on the buyer and seller. Amna Lodi, how does P6 ensure that the charity amount actually being paid out by companies? Well, actually it is being done by investors. So neither the PSX nor the SECP ensures that charity amount of purification income is actually being paid out by investors. Investors are supposed to purify the income, not the companies, right? But on the other hand, obviously, we have Sharia compliant mutual funds, and as those mutual funds are regulated by SECP, so obviously they are being evaluated, judged, and checked by the regulators and the auditors and all considered control clusters as to whether they have paid the charity amount well in time or not. Means, is it allowed for the banks to purchase the shares in the Muraba transaction at less than the market price? Yes, they can. As an Raza, yes, they can. It will be an out of market transaction or maybe a C2C transaction. Yes. Okay, Ji, thank you very much. I believe there are no other questions. It's about time. So thank you very much, ladies and gentlemen, for your time. It was lovely speaking with you, and please do share your feedback in the comments, and the recording of the session will be available on the Facebook of IBSC as well as even the YouTube channel of IBSC. So you can write your comments there. You can also send the email suggesting how we can improve our sessions and on what topics you expect us to be in touch with you on, especially in the field of Islamic banking and finance. So Jazakallah khairan. Thank you very much for your time. Stay blessed. Jazakallah. Assalamu alaikum wa rahmatullahi wa barakatuh. WhatsApp question is it the same as AOP or we have different Sharia screening criteria? So Dr. Sahab, we have different Sharia screening criteria, which is being used by KMI. It is developed by Mizan Bank Sharia Supervisory Board, chaired by Sheikh Taqi Usmani, who is also the chairman of AOP Sharia Board as well. The difference, one of the reasons for the difference is obviously it varies from country to country, economy to economy, whereby in certain countries we have tax-free environment as well. In certain countries we have, in Pakistani economy, we have companies who are doing business having huge debts, and they do business on through taking finances, while in other countries that's not the case. So scholars are taking decision on the basis of a particular country So that is the reason why there is a difference in screening criteria, as is the case in the US and developed countries, whereby majority of the companies, they use the Dow Jones Islamic Market Index criteria. So it varies from country to country. What are the major challenges you face while performing Sharia screening? Oh, a very good question. What are the major challenges being faced while performing the Sharia screening of victim? A lot of it. Actually, fortunately, in Pakistan, there is a mandatory regulatory requirement for the disclosure for a company related to you know, Sharia compliant financing that they take and other related areas, so that it can be screened conveniently. But unfortunately, not all companies are following those instructions, and I've been informed by a very responsible source that the regulators are looking into it. They are seriously evaluating those companies and watching those companies that are not making those disclosures properly, so as to make it convenient for Sharia minded investors to decide whether this company is Sharia compliant or not. So lack of proper disclosure by the companies so as to evaluate that company's Sharia compliance status is a major challenge. On the other hand, not all companies issue their financial statements publicly at proper time. So this is another issue and challenge, whereby we need financial information at the right time so as to process it at the right time. So these are the few challenges. Unfortunately, there is, I mean, in the international market, the data is available in a standard language in the soft form, which can be conveniently interpreted by the systems. It can be, you know, downloaded easily and conveniently. But unfortunately, Pakistan, we are in the process of converting our data to that digital form. Not yet. So from that perspective, there is an element of sometimes human error as well, which is a risk there. But alhamdulillah, we're trying our level best. Alhamdulillah, we have been doing this for past many years. So inshallah, it is gradually improving. Things are, you know, going in the right direction. Alhamdulillah. So thank you for asking these questions. Suggestions to IBSC. Currently, IBSC is playing a vital role in educating spending to Islam banking. IBSC to please arrange another webinar on cryptocurrencies, bitcoins, covering Sharia guidance from Sheikh Usmani. Definitely, your message is being conveyed to IBSC, and inshallah, we'll definitely plan. Is in Hassan Raza, in shares Muraba, is it permissible to sell or buy the shares at the price less than the market price? There is no harm in it. Essence Saab, there is no problem in shares Muraba. Even if it's not Muraba, it can be Musawama, anything, it's possible. Once a script is there, I mean, once an asset is there in your ownership, you can sell it over and above the cost price, maybe at the market price, or maybe lower than market price or higher than market price. It all depends on the buyer and seller. Amna Lodi, how does PSXCCP ensure that the charity amount actually being paid out by companies? Well, actually it is being done by investors. So neither the PSX nor the SCCP ensures that charity amount of purification income is actually being paid out by investors. Investors are supposed to purify the income, not the companies, right? But on the other hand, obviously, we have Sharia compliant mutual funds, and as those mutual funds are regulated by SCCP, so obviously they are being evaluated, judged, and checked by the regulators and the auditors and all considered control clusters as to whether they have paid the charity amount well in time or not. Means, is it allowed for the banks to purchase the shares in the Muraba transaction at less than the market price? Yes, they can. As an Raza, yes, they can. It will be an out of market transaction or maybe a C2C transaction. Yes. Okay, Ji, thank you very much. I believe there are no other questions. It's about time. So thank you very much, ladies and gentlemen, for your time. It was lovely speaking with you, and please do share your feedback in the comments, and the recording of the session will be available on the Facebook of IBSC, as well as even the YouTube channel of IBSC. So you can write your comments there. You can also send the email suggesting how we can improve our sessions and on what topics you expect us to be in touch with you on, especially in the field of Islamic banking and finance. So Jazakallah khairan. Thank you very much for your time. Stay blessed. Jazakallah. Assalamu alaikum wa rahmatullahi wa barakatuh.